Welcome back, dear learners. Before the ad break, we did the types of budgets and the periods for budgets. We will now look at the cash budget. We have already defined the cash budget, all right? It is a budget that shows the expected inflows and outflows of cash, all right? The cash budget reflects the expected balance in the bank during the budgeted period. When we talk about cash received, we would expect to receive cash from our cash sales, receipts from debtors, that is, we sell goods on credit, then the debtors pay us, so we record it under cash received. Rent income, this is the money we receive from our tenants. Interest received, that is interest on investments, we're talking fixed deposit. Investments matured, when we have invested money and then that investment matures. Sale of fixed assets, when we sell fixed assets, then that money we record it under our cash received. Loans taken out, when we receive a loan from the bank, the amount of money that we receive, we record it under our cash received. We also have cash paid out. Examples would include cash purchases of trading stock and fixed assets. So when we buy trading stock on cash or fixed assets, that would be cash paid out. Payments to creditors. We understand that we also buy stock on credit and then we have to pay them after a particular period. We also record that particular payment under cash paid out. Cash payments of operating expenses, for example, rent, salaries, and the telephone. When we have expenses that we pay for, that goes to be recorded under cash paid out. Cash withdrawals by the owner, drawings of cash. This is recorded under cash paid out. Cash invested, when we take cash and put it in an investment, it goes under cash paid out, as well as loans repaid. When we get a loan from the bank, we have to end up paying it. When we pay back that loan, it goes under cash paid out. The following items will not be recorded in the cash budget. All right, so when we prepare a cash budget, we need to record items that are known as cash items. And then there are items that do not involve cash, non-cash items. And these non-cash items will not be recorded in the cash budget. And the examples include discount allowed, discount received, bad debts, depreciation, profit on sale of an asset, and loss on sale of an asset. These are what we call non-cash items. We will now see how a cash budget looks like. All right, so this is a cash budget for the month of July. We are then required to determine the following. Number one, total receipts for the month of July. Total payments, that is number two. Cash surplus or deficit, and then we calculate the closing bank balance for the month of July. Let's start with number one. Number one is saying, calculate total receipts for the month of July. To get the total receipts for the month of July, we'll come to our cash receipts here. Make sure you have your calculator close to you. We're going to say 42,000 plus. So the 42,000 is for the cash sales, plus receipts from debtors 25.2, plus capital contribution 20,000. If we add these three amounts, we will then have 87,200. 87,200. That gives us total receipts for the month of July. I'll go to question number two. Question number two says, calculate the total payments for the month of July. Total payments for the month of July. To get total payments, I'm now coming to the payments section. I'm going to add on my calculator 3,000 plus 34,155 plus 4,500 plus 10,000 plus 1,600 plus 600, and then I add 2,000 for the salaries and wages. On my calculator, I'll get 55,855. And I know that my payments must be subtracted, so I'll just put a bracket already. My total payments are 55,855, and payments must be in brackets. Question 3 then says, determine the following: cash surplus or deficit for the month. If I'm to get my cash surplus or deficit, I must say total receipts, which is 87,200, minus total payments, which is 55,855. If I punch that in my calculator, I'll get 31,345. 31,345. So I'll come here. It is a surplus because you can see this amount is positive. It is positive. When I subtract my total payments from my receipts, I remain with a positive 31,345. So I'll come here, my surplus is 31,345. If it was negative, then it would have been a deficit. Number 4 says, calculate the closing balance for the month of July. So to get the closing balance, I'm now saying my cash surplus plus my opening bank balance. So I'm simply adding 31,345, which is my surplus, plus my opening bank balance of 8,400. That will give me 39,745. So I'll come here at the bottom, 39,745. That therefore becomes my cash closing balance. So if a question comes and says, what was the amount of money that was on the bank balance, or what is the amount that was on the bank balance, that would be 39,475. Dear learners, thank you so much for joining me in today's class. I hope to see you again very soon. Goodbye.